In this video, I will like to go in details about order blocks and give y'all watching right now the ultimate guide on how to spot the right order block to trade in order to increase your win rate and of course your risk to reward ratio. But before all that, I would like to ask a question. What is an order block? According to Google, an order block is a market behavior that reveals the pile-up of orders by large entities. In Forex, the order blocks are used by the banks to split their big orders into small chunks so that they get their orders filled at better prices without disturbing the market equilibrium. In my own understanding, order block is the last bearish candle before a big bullish move for uptrend market, and it is also the last bullish candle before a big, strong bearish move for a downtrend market. Order blocks are the build block of excellence trades. When trading order blocks, you'd notice how your trading win rate improves and how your risk to reward skyrocket as well. If you were focusing on 1 to 3 risk to reward before on a single trade, order block would definitely increase that by 1 to 5 or 1 to 10 easily. For investors, traders that doesn't know anything about order block and the confluences you need to get a high probability order block, do not worry because I will be giving you full steps on how to mark a valid order block to skyrocket your win rate and your risk to reward ratio. Firstly, I got some criterias that an order block must have before calling it a valid order block. These criterias are: 1. It must break structure. To me, this is a must because an order block that didn't break any form of market structure is considered weak, which means the price may not hold. 2. Impulsive moves. The order block must break the structure with some good strong impulsive moves. We do not want to see a weak move break of structure because price wouldn't leave some kind of imbalances, and y'all know that it is this imbalances that moves the price. 3. The order block must not be mitigated. This means that the order block must be fresh. These are the 3 criteria I consider when marking out an order block, and I will give you guys the steps on how I select an order block and choose when to trade. The first steps on spotting an order block is to first mark out your market structure as to know if the price action and trading bias. For y'all that want to know how to also mark a valid market structure, you can consider watching my first video where I talk about it with simple steps. Step 2. After marking out the market structure, it is time for you to look for your order blocks in the recent price action. Please note that there are multiple order blocks in a chart, but you just have to spot the right one or two. In the first example, I would be using BNB. Now, this is Binance coin. Please do not forget to stick with the higher timeframe for order block because higher timeframes order blocks are always stronger than the lower timeframe, and I'm very sure you want a strong and valid order block. So I would recommend the higher timeframe ones. Step 3. Looking at the recent price action, ask yourself some questions like: have I gotten the trend bias? Do I know who is in control now? Is the recent price action heading to the downside or the upside? As for this pair, we can clearly see that it is on a bearish phase, and if I am asked to mark the recent price action, it would be like this. Step 4. After marking the structure, I would look for the recent swing high and swing low. Looking at this Binance coin swing high and low, you'd notice that it broke structure. So my order block would be at this spot. This is because it is the last bullish candle before the big, strong bearish candles. It also met all my order block confluences, which are: order block must break structure, it must break with impulsive moves, and it must be fresh and not be mitigated. After marking, you have to wait for price to come to your unmitigated order block zone, and then you are free to take the trade, either by using the whole order block or 50% of the order block. As for me, I do trade the 50% because it reduces my risk and increases my reward, so I can have the RR to my favor. In conclusion, after some days, price came to mitigate the 50% order block and ended up in a 1 to 10 RR profit. You can now see how the order block works. Now I want you to go practice these steps exactly. Do not proceed to know about liquidity and inducement for now because it will only confuse you as a beginner trader. This will be the end of this video. I will be uploading more of my trades examples here on YouTube, so for you to know more about order block. So you have to subscribe to this channel so as not to miss the examples when it finally drops. Thanks for watching this video. If you love this video, kindly like, share, subscribe and trade wisely. Thanks.